analysts expect South Africa's economy to improve by around 0.3% in the third quarter, following a 0.4% GDP growth in the second quarter. The latest figures are actually expected at 11:30 this morning. This anticipated growth is mainly supported by political stability and a stable electricity supply, among other things. SABC's preliminary snapshot of economic performance shows that a number of sectors witnessed a rise in economic activity in the third quarter of the year. Let's get you a sense of what else to think. I'll bring in Johann Els, Group Chief Economist at Old Mutual Limited, and joins us now via our video link. Johann, great to see you. Thanks very much indeed for making time to us. The sentiment really since the Government of National Unity was formed is that there is a whole confidence in our prospects to grow, and I wonder to what extent you reckon will be sustained once we finally get those figures from Stats SA.
Absolutely. Confidence is a huge ingredient in terms of economic growth. When you and I as businesses out there or investors are more confident about the future of the economy, then they invest, and those circular drivers in the economy then leads to better. As you rightly said, a number of sectors actually performed quite well in the third quarter, but going forward as well, I think this confidence pickup will drive growth over the next few quarters into the next few years. So I think we're into a trend of more sustainable, higher economic growth than what we've come used to over the past few years.
Yeah, I mean, growth is always accepted, or in fact welcomed, I should say, but there's also questions about meaningful growth, especially for a country like ours. I mean, I'm just looking at the figures I've just cited there, 0.4%, 0.3%, away from the kind of growth we need, for example, to start chewing away into our unemployment figures.
No. We probably need growth in South Africa on a sustainable basis, around 5 to 6% on an annual basis. It's unlikely that we're heading that direction pretty soon, but we can get from the 1% growth again on the annual basis before COVID towards 2.5 to 3%. And that will start out to drive better employment growth. Unfortunately, that means the unemployment rate will stay high for a long time. The unemployment rate will only gradually start easing after a number of years of growth around 2 to 3%. But make no mistake, growth around 2 to 3%, it's 3 times the 1% we had, and gradually will have a significant impact in terms of profitability of companies. The ability of companies to employ more people. That drives more money in consumer pockets. And in an era when inflation is now very low compared to where it has been, and interest rates are being cut, the cyclical in growth. But we've got a lot of work to do still in terms of the structural strengths. We've done a lot in terms of electricity, but we still need to sort out logistics. Transnet has been failing in terms of the ports and the railways. So there's a lot of work still that we need to do. We can think about water supply, we can think about municipal capacity to do those infrastructure spending, etc. So, but we're on the right trajectory. We're moving in the right direction. We should just expect to get there today or tomorrow. But down the line, we are moving ahead.
Speaking about the work that needs to be done, we did see some volatility in the agricultural sector, contractions also in manufacturing and trade as well. I mean, how confident are you that we're getting around to ensuring a whole lot more stability there, given just how much of our GDP relies on these sectors?
Yeah, absolutely. So it's not all sectors that's pumping positive numbers yet. We're driving in that direction. And for some of these, it's difficult to forecast. Like agricultural production has been pretty volatile on a quarterly basis. But at least with better electricity, it seems we're at the end of load shedding, and electricity production itself was up quite strongly in the third quarter. Mining production was up strong, car sales, retail sales. So there's a number of sectors that are actually moving into stronger positive territory. We're still behind in terms of construction activity, so there are some sectors lagging. And until we get all sectors to pumping positive growth, it's still going to be pretty volatile performance on a quarterly basis. But at an annual basis, once we get a couple of quarters positive numbers in the overall GDP, then we're driving towards better overall growth.
Yeah, I know we're speaking about the third quarter statistics, but I'm sure everybody's watching even what's taking place today to get a sense of whether or not this trajectory can be sustained. And as I say that, what comes to mind is comments, for example, from the likes of Donald Trump threatening 100% tariffs if there were to be any kind of currency from the BRICS bloc of nations. I wonder to what extent all of that talk might be feeding to the sentiment we initially spoke about, and where South Africa might be impacted by that, given just, for example, the performance of our rand over the past couple of weeks.
Absolutely, 100% tariff on our exports to the US would be hugely negative for the economy. But then we have to take these things into perspective. And I think once we realize that the likelihood of a BRICS currency is minuscule, then we realize that unlikely to have 100% tariffs on our exports to the US. And why I say the likelihood of it is very low indeed is the fact that you need a central policy around inflation targeting, you need a central policy on monetary policy, interest rate policy. So thus you need one single central bank for all the BRICS countries, similar to the European Central Bank for all the Euro area countries. And it's unlikely that the Chinese would be willing to accept monetary policy or interest rate policy being set at the central bank in South Africa, or that Brazil will be willing to take interest rate policy being set in China, etc. So it's such a diverse group of countries that it's hugely unlikely that we'll have one single monetary policy. And these are the requirements before you can have one single currency. So even if there's talk about a BRICS currency, it's hugely unlikely that we'll see anything like that in the next 20, 30, 40, 50 years.
All right.
So unlikely that Trump will be able to institute 100% currency on this basis, on the basis of a single currency.
Yeah, if he does go ahead with something like that, I have no doubt it would be the first of its kind. But anyway, I think we've seen many precedent moments over the past couple of years, so let's not sit. Johann Els, thanks very much indeed for speaking to us. We appreciate the time and the insights. Johann is the Group Chief Economist at Old Mutual Limited.